IBM earnings also crossing the wire just a little while ago here. The main headline there appears to be the sales increase forecast, 3 to 5% for 2023, a little bit lighter than what some folks thought. Anurag Rana joining us right now, a senior technology analyst over at Bloomberg Intelligence. We knew that the market was going to be a little soft here. A company, though, still forecasting growth. Anurag, what caught your eye?
Yeah, I would say that the expectations for IBM were so low, and they crossed that bar. I mean, almost across the board, we saw, slightly better. When I say slightly, it's only, less than 1 percentage point better than what people expected. Overall, I think it's okay. I think they kept the free cash flow guidance intact. I think that's a positive. Red Hat was slightly lighter than what we thought, so that's on the negative side. So overall, I would say, a balanced quarter for IBM.
What is sort of, earlier today we were talking a lot about CDW and Extreme Networks, and obviously not direct competitors to IBM, but they did give some insight on IT spending, and the executives there seem to suggest that things are slowing materially. And I'm wondering how much IBM and its current structure and the way that it pivoted to the cloud, if that provides maybe a little bit more insulation.
See, I don't think it's insulation, but they are still doing slightly better than the old IBM, and largely because 70% of their revenue comes from software and services. At the same time, we are looking at growth rates of 3 to 4 or 5%. It's not as if this company is growing, 8 to 10%, and we saw a massive slowdown, which could be the case next week when other tech companies report. But in their case, the bar is so low that that was easy for them to cross it.
So what's the next step for them then, Anurag? What are you expecting? What do you want to hear out of them?
I think the comments is going to be about the growth slowing down or the demand slowing down. If they're able to keep up with 3 to 5 this year, and we see a bounce back in tech spending next year, they can improve on that growth rate to perhaps 7 to 9% once we do see a bounce back. So from that point, I think IBM is a stable company from just their cash flow point of view.
Well, one final question here. There was a report on the Bloomberg terminal floating around last week about the company looking to divest this weather business that it had acquired, I guess maybe back in 2015 or so. And there has been a lot of discussion about some of the other divestitures that IBM has made and whether this becomes part of the strategy here to keep this company profitable.
So one of the things we have noticed is IBM is a lot more focused company under the new CEO, and it's focusing a lot of the infrastructure software products. So we do expect them to, perhaps get rid of some things that is not so core to their portfolio, and perhaps acquire some entities that are, tied to their infrastructure cloud product.